Hello and welcome to PQ Prime. A very good afternoon to all the viewers. I am Hiral Dadia. Let's quickly look at what the markets are doing because the bulls were absolutely in action as we started off the day and currently 100 points up move. Still, we are below the 19,800 mark. Overall, Bank Nifty has also started to come in and it's trading pretty much at par with Nifty with gains of 225 points coming in there above 46,000 levels. Now, what this would mean for the markets from here on is what we need to understand because earlier, the way we've been tracking 20,000 levels, it became a far fetched dream once again. Now, let's understand where we are and what levels we should be tracking. Aditya Shah joins in. Aditya, good afternoon and welcome to the show. What are the levels that you're tracking specifically on Nifty 50? Last two trading sessions we've seen selling. Today, again, there is some bit of pickup that's happening and the bulls are coming back into action. We know it's expiry tomorrow, so yes, there will be volatility, but what are you looking at?
Hi, good afternoon. Thanks for coming to the show. Clearly, markets are all over the place at the moment, and we are sitting on decent gains. Like the last time I spoke, though we are eyeing at 20K, it's matter of time before we hit 20K. But I still believe from here on, markets could enter into that choppy and volatile phase. Not saying I'm looking at a major correction in the market. I don't see that coming anytime soon. Maybe we'll first hit 20,500, 20,600 on the index, and then we could see a bit of a profit booking kick in the markets. At the moment, yesterday's low will act as a very important support. And if we just take a look at the options data for tomorrow's expiry, it looks like 19,800 put additions are seeing a good addition in 19,800 strike price puts. So I believe 19,800 will act as a support for a day or two. And I won't be surprised if Nifty actually scales to levels of 19,900 or maybe closer to 20K as well. So I'm not bearish at the moment, especially from today and tomorrow's perspective. Today's chart is done. Tomorrow, I believe markets will head closer to 19,900. And giving momentum to the index will be the Bank Nifty. That is looking very strong here. If you take a look at the internals of Bank Nifty, Axis Bank, which hadn't participated in last few trading weeks, looks attractive at current levels. ICICI Bank has been participating. There's a good bit of outperformance from SBI as well. So I believe banking stocks one should clearly focus on for at least this week, and markets will see a decent run up from here on.
Right. Apart from that, how are you looking at a Bank Nifty? Because clearly there has been profit booking in terms of Bank Nifty. And it's a battle zone between 45,850 to 46,000 for Bank Nifty currently. Uh, how are you tracking it?
So, I think, like I mentioned, I believe banking index is something that traders should closely monitor. And I'm looking at a level of 47,800 to about 48,000 immediately on the bank nifty. If that is taken on, maybe 49,000 is also something that can be done very easily. Why I say so is because a lot of these banking stocks are looking attractive, especially the names like ICICI, Axis, Kotak. Within the large cap banks, IndusInd, mind you, has been performing big time. So I'm looking at these three large cap private banks if I want to play the bank nifty and look at the PSU lot. A lot of these PSU stocks are looking very attractive. You name it, and Canara Bank, PNB, Union Bank, all of these stocks are looking very good on charts. So I believe the rally will be started with the private sector banks and it will trickle down to the PSU banks as well. I'm bullish, especially on the banking space at this moment. So I would like to stick my neck out and buy the banking space stocks and look at buying the bank nifty as well for a target of 48,000 on the upside.
Right. In terms of stock specific action, how are you looking at L&T? The stock is up 3.5%. What is the FNO data indicating in terms of strategy?
So, clearly because of the buyback news at 3,000, there is a bit of a long build-up which we are seeing in L&T. Definitely a very strong looking charts. If I look at the chart structure and if I look at the derivative data as well, looks like there's a long build-up in the stock for sure. L&T, because of the buyback, definitely the stock will remain positive at current levels. After this run up, I'm not looking at looking fresh entry in L&T. Maybe a minor profit booking will provide an opportunity in NNT. But yes, if somebody is already holding on to the positions in NNT, continue to hold on to them. And I'm not too sure if you should participate in the buyback unless you had bought it 2-3 years back and you're sitting on very handsome gains. Then it makes sense, because if you take a look at the recent the results, the order book, all of it is looking very strong. The charts also are indicating that it's strong going for the stock. And the entire space here, the infrastructure, usually it tends to outperform just before election year and during election year. So I think so. This is also one space one should not look at exiting so soon, rather than building positions selectively.
Right. What about Tata Motors and Tata Motors DVR? Because massive action on the DVR end. What's the arbitrage opportunity you're seeing?
So, Hiral, there was an arbitrage opportunity, to be honest. And after this sharp 12% up move in Tata Motors DVR, that arbitrage opportunity is not there. In fact, I've not taken a look at the ratio today and maybe yesterday. But in the best of cases, the discount between the Tata Motors and Tata Motors DVR boils down to 25 to 30% in the best of times. And in the worst of times, it expands to 50, 55 to about 60 as well. And recently, in fact, we had come out with a note saying that we should look at a DVR rather than a Tata Motors. Because if the way the company's performances are going ahead, it's the DVR which will start to outperform. And we are witnessing that. So I'll have to check once again what is the kind of arbitrage opportunity which is there still in the DVR. But I believe most of it is done. So you don't have the risk to reward anymore in favor of a DVR. So it's either ways, if you buy a DVR or a Tata Motor, will not make too much of difference now, especially given the fact that Tata Motor DVR has shot up 12% post numbers.
Right. Apart from this, any other stocks that come to your radar one should be watching out for from an expiry perspective?
I think Hiral, the real estate pack is looking attractive, and select FMCG stocks as well. Like a Britannia is looking attractive. ITC, after 2 days of decent correction, looks like there could be a short covering rally which can come in from expiry perspective. And if I take a look at the real estate pack, two stocks definitely stand out. One is your Godrej Properties. I believe that should do fairly well. And second is DLF. I think so that should too chip in with decent gains from an expiry perspective. These are some of the stocks which look good to me. Apart from that, there are pockets here and there which definitely stand out, like a pyramid. Also, you can qualify it into real estate now. That also looks a decent pick from real estate space.
Right. Apart from this, in terms of few of the other names that I was looking at, if you see a Escorts, that stock is also seeing a long build up in trade today. What should the strategy be?
So here clearly it's one of those stocks which makes higher high, higher lows, and in today's trading session, it's broken out into an all-time high territory. And I'm just as a disclaimer, this is one stock which you recommended to clients day before yesterday for a target of 2,500 on the upside. I believe it's on course to achieve that target, and on the downside, one should place a stop loss closer to about 2,370. It's still a very good buy. Maybe one can look at a BTST as well in. Escorts looks a very strong candidate, clearly given the fact that it's broken out into an all-time high territory today.
Okay. And away from that, if you see on the short side, Canfin Homes and Jindal Steel is seeing a short build up in trade today. What should the strategy be with both these names?
So coming to Canfin, yes, there is selling on very good volumes, and this is a good short build-up. The volumes pattern that build-up that I'm seeing on the stock, both on the futures and the cash side, clearly tells me that there is more downside in the stock. If somebody is already short in the stock, continue to hold with a stop loss closer to about 790. Stock can clearly slide all the way down to 745, 750. If somebody is looking to initiate fresh shots, I would suggest do that tomorrow. Don't take a short position today, because if tomorrow there's a minor pullback rally in the stock, that will give you an opportunity to short at higher levels. Maybe with a stop loss closer to about 800. If the stock opens below 800, then you can initiate fresh short positions here, because there is weakness in the stock, and I believe stock will slide at least to levels of 745, 750 in the near term.
Right. So that's with regards to individual counters. Thank you, Aditya, so much for joining us on the show and sharing the views. But clearly, the bulls are in action today, and we are seeing those moves coming in terms of Nifty as well as Bank Nifty. And you have the PSU Bank Index, which is the top gaining index as we speak. That's all that we have on this session. And thanks for watching, and lots more lined up on the other side. Please stay tuned to PQ Prime.